So a few things to think about. Raising funding in recent years has been seen as a mark of success and a validator for those who are raising capital. And I just want to say, I understand how sexy it can be and how much we can all want to, have our company name in a headline with some millions of dollars tagged to that. But however, the earlier you raise capital for your business, particularly and especially if it's not strategic, the more of your company you're just kind of blindly giving away. Like when you raise capital from investors, they don't just want the capital back. I need 1,000 times the money that I put into the original business. We're expecting meaningful and potentially fund returning returns from every investment that we do. And I want to remind founders that are thinking about raising capital very early when they initially launch their business that one, the type of returns that people are expecting with that capital. Two, that if you raise money before you have traction, product market fit, et cetera, you can't command a meaningful valuation, which means that if you raise, say, $100,000 and you can only command a 1 million valuation, you've just given away 10% of your business, as opposed to if you wait potentially some months up to a year later where you have meaningful traction, you've figured out the model, you've already had conversations with investors, so you can sort of ask for a higher valuation or for a lower equity stake. You'd be at a better advantage in the long term of your business. And so us specifically, we only invest in post-traction businesses that have established product market fit, are in market and have sort of those basic metrics figured out, technical co-founder, et cetera. And the last thing that I want to bring to light and remind founders about is that I say this all the time, but I'll say it again, the sweetest money you will ever have is that from your customer, not your investor. Because when you make money after you've given a customer a product or a service and you've collected the funds, you don't have to return it to anyone. It's then your money to do with what you please. Obviously, continue scaling your business, investing in the infrastructure, et cetera. But nobody's checking over your shoulder and waiting, counting down the days until you give that money back. It's yours for life. So I want founders to be mindful of the impact of raising venture capital too early. And also the importance of figuring out business models that are revenue generating from the beginning.